Well, the good news is that there are going to be winners as well as losers. So you have a situation where there's a trade war between China and India, which means that some of the manufacturing that takes place in China is going to have to move to other emerging markets, which already is beginning to take place. That's why I believe it's a great opportunity for India, because India can produce a lot of the things that China is now producing and ship into the U.S. So what we do is we look at the global situation and say, okay, there's this trade war. China may not be able to export as much to the U.S., but the U.S. is growing at 3%. So they're going to have to demand more and more consumer goods, and those goods could come from India, already coming from Vietnam, Bangladesh, Turkey, all these markets which have experienced an incredible decline in currency will become much more export productive. I'm very optimistic about the global growth generally because of these factors. And then you have India coming in. Brazil is now growing again. You know, talk about the BRICS. Brazil, India, China, Russia. They're all looking pretty good. Not bad.
But that's because they've always looked pretty good to you, Dr. Mobius. You've never been bearish. I want to, before I come down to talking about how India stands out in the emerging market pack, one more important factor when you look at the global picture right now is what's happening with, managing monetary policy decisions with regards to getting a quick assessment on growth projections for the future. How do you think one would move on that front? Everybody's eyeing what the Fed is going to do in 2019. But do you think that there would be a marked shift in the monetary policy stance taken by key central banks across the world in managing the balance between growth and inflation?
I think generally speaking, there is a growing realization that central banks have become too powerful and have had too much influence on the markets and on economic behavior generally. So looking forward, I believe the political forces will begin to take over the role of central banks. In other words, the influence of the people in power politically will begin to encroach upon central bank initiatives and prerogatives, which I think is probably a very good thing, because simply because the central banks are relying on information that is quite questionable to begin with. I mean, inflation statistics are very questionable.
That's true.
And they're making decisions about interest rates and about all these other very important factors. And more importantly, the market is paying attention to these things, that it's having an undue negative influence.
But I think that, so you don't expect the Fed to move 4 times in 2019 as they have in 2018?
Let's put it this way. I hope that Trump can put enough pressure on them not to do it, because I think it'll be a big mistake.
He's already doing that. Just scan his Twitter handle every single day, and he has enough tweets to
And I think it's true of other countries around the world. I know here in India there's been talk about, more pressure on the Reserve Bank. And I think there's nothing wrong with that. I think, a lot of the bond people in the world worry about what the central banks are doing, and they should be concerned, of course. But at the end of the day, what are we talking about? We're talking about economic growth.